The Bean Counter to Boss podcast is powered by Expert. Expert is the AI data and workflow management kit for bookkeepers and accountants, keeping your data clean and boosting productivity. Automate manual bookkeeping checks and streamline your entire workflow. Expert is your trusted sidekick, tirelessly checking the data for errors and helping you manage workflow easily. Process, visibility, and data quality control in one AI-driven system. If you're interested in trying Expert for free, visit our website at www.expert.io, where you can start a 2-week free trial.
Hello, everyone, and welcome to episode 6 of the Bean Counter to Boss podcast. This one is an exciting one. I'm looking forward to this one. I've been looking forward to this one since we started recording these, to be honest. Pricing with confidence, value versus time. So we're going to chat through kind of your guys' structure of how you price, how you've evolved your pricing structure since you started, what you're using to help you with your pricing structure, what advice you'd give to people, but also talking about sort of value pricing versus hourly billing, how you're communicating price increases with clients. We can even talk about some software price increases if you like, and how you're managing that, because that's always a hot topic, right? That's always a hot topic.
Controversial.
Cool. Let's just get straight into it. How much do you charge, Amy?
Let's go way back to the beginning, way back to 2015. God, that's 10 years ago.
Jeez.
I know, right?
So
To show my age. So I basically started with what I was charging at work. So I've always been an accountant. I've always worked in practice. So it's what I would charge at work, and then went down to a third of that. Don't ask me why. There was this kind of perception of, oh, these are my friends. I need to help them, just a little bit in my pocket, that kind of thing. So I went down to third, and that stuck with me. Undercharging massively compared to what I was charging in my day job. When I decided to take this full time, I still did it. My charge out rate as an audit manager was, I think when I left, was £165 an hour. And when I left, and that was probably less than the market rate at that point in time. So this is 2023. And when I left, I was like, oh, do you know what? We'll do 50. I know your eyes say it all. I know. And and then starting like that, obviously we'll go into the value pricing side of things and how I've done the bookkeeping, because it's slightly different, but I'm just thinking hourly rate for now. I'm still in that hourly rate mindset to this day. And I think it's because in the audit space, there is a budget, how long things are going to take. I haven't been able to shake out of that. And I think a lot of the auditors are in the same boat as me. And it's been an upward climb from there, basically. One of the first pieces of software I got was Ignition, where I met you, Will. I was leaning on the ACCA to help me.
And it was all downhill from there after you met me.
Yeah. I know, I can't get rid of you now. It was one of the first pieces of software I've got because I was leaning on the ACCA, and Ignition had a partnership with them, and there was a deal. And everyone likes a deal, right? I was like, do I really need this? Because people were paying me by like just putting in my bank details and putting it in a business bank account. But as I started to get more clients, I was like, this is getting a little bit more tricky. So yeah, let's go for it. It was like I can't remember what the deal was. It was like a third of the price. There's a third. Sticking with it. Started using Ignition, and then within there's like an estimate to start with when you first go in there, isn't there? This is kind of, and I don't know if there's a lot of market research into that, but I had to reduce every single one down to what I was charging my mates and my mates of mates. I was like, hang on a minute. And been climbing my way out of there since then. I think by now, so 2025, 10 years since I really started the practice. I'm at a point where I'm quite happy with what I'm charging, and I feel like I am charging my worth.
Okay. So Joe,
Audit
that
space
kind
is
of
different,
answers the
but
question I was going to ask you. Like, what does quite happy with what you're charging mean? Like,
I mean, I'm always keeping an eye on what other people are charging. It's always that kind of, there's that fear as an accountant of a sales conversation. So the pricing's always like wrapped into that. So there's always that fear like, oh, am I too much? Am I too
you don't have to
low?
answer,
And
you don't have to answer this if you don't want to. But
no, go for it.
what's your profit margin?
Low.
Do you
Low.
know it?
I've gone through a whole repricing exercise in April this year. Because that, like, in my head, you know, there's the business model, a third, right? So I looked at my wages cost compared to my sales, and I was at 50%
Yeah.
wages cost to sales.
Yeah.
And that is giving me what I earned as an audit manager. And that's all I wanted to do at the start with. I wanted to be happy with that. But now gradually, as I've kind of spoken with more accountants, and obviously prices are going up, I need to know my worth more. So I did a whole repricing exercise in April, making sure I was covering all the costs. So I don't have a definitive figure for you because I'm still working on trying to climb up from that.
Do you have a goal in mind? Is it that 30% that you want to get to? Is that where you want to?
I'd like to. I think it's quite hard to achieve. I would, and especially like my whole practice structure is changing at the moment. Use like employees and subcontractors and things. Obviously, with using subcontractors, it's costing me more money. So I'm constantly evolving and changing the aims. I've got a turnover aim in mind. So by the end of March, so my year ends March 25, I want to be at 350,000. March 25. I'd like to be at the point where
20,
I am earning, sorry?
26, right?
2026. Yeah, 2026. I'd like to be at the point where I'm able to pay myself more than what I was earning. So they're like my two goals, but it keeps changing. The margins keep changing as I'm changing software, trying to automate more. I'm dropping some subscriptions. I'm picking up some subscriptions. So yeah, everything's changing every day. I'm probably guilty of not knowing my numbers as well as I know my clients' numbers.
But I think we're all in the same boat, Amy, if I'm honest, at times.
Yeah.
You think how many times you see young company's house and the set of accounts or accountants are quite filed nearing the filing deadline because it's all done, you know, not saying I'm like that, but, you know, it's all done.
You do a lot more of the stalking than I do, not going to lie.
You know, it's that sense though, isn't it? It's like you say, you probably hit the nail on the head. That we're as an industry, we're very good at knowing what our clients are doing, but where it's not until probably the people are looking to exit, then that truly becomes evident that actually they don't know their own numbers.
Yeah. And I'll ask the same question to you, James. Like, how across the numbers are you? Like, do you have like a KPI in mind that you want to get to when it comes to
so you know,
versus outgoings, etc.?
our turnovers targeting 450 for 26. You know, it's obviously a bit of a hit because of what you know, internal changes have been going on. So be realistic. Our margins are around about 15 net margin, you know, net profit 15-16%, and it's dropped a bit under that to 12%, I think, at the moment, off the top of my head. So I am aware of what's going on, but as I said, you know, openly, you know, I've been on holiday recently and come back and taken this time along with a colleague of mine to work through processes and get on top of some things to hopefully make the numbers better, you know, and part of it is actually to go back and relook at our pricing because, like Amy, our journey was I started doing it with friends under James's name, and it's kind of evolved from there. And then I kind of had an idea of, well, I knew how much it cost to run as a practice, so always in my head was like, well, we've got to keep try and make double that a day. Because that means I can take what I want, but obviously as time when you grow, and then all of a sudden it can have a trajectory where it's practically like that. I'm not saying it's like that happened for us, but if you have that trajectory, you can kind of lose sight on some things.
and you end up giving away time, which is what we are now doing. And it's like, okay, so we've got to try and rein it back in. And part of it has been going back over our pricing.
Yeah, okay. And I presume both of you majority fixed fee billing, not time based. Do you bill anyone time based?
Occasionally
I do
on
the
some really
odd.
ad hoc
Yeah.
work. And that's because maybe we've not done it before. Not saying we've not done it before. It's been a long time since we've done it, so you want to make sure then that we're honest enough to have the discussion up front with the client and go through and say, okay, well, this is time based, so then you build on time, but most of it's fixed rate.
Yeah, all direct debits.
Yeah, we got a couple of James's old clients that we've got are still doing annually, which is driving me around the bend. I'm not. You can use that as a quote against. You can use that as a quote against me.
Surely you could do an annual direct debit.
Yeah, no. This is the point. My point is that we've got so much. Everything's down monthly in order to manage the cash flow. Things should be monthly. It's way more manageable for us. So, as much as it's nice to give a lump sum at the end, you're also giving them free credit in that year. And
You're speaking to me right now.
You're giving free credit in that year, but also then they could take a while to pay it. So that's the other thing. If they're not on a direct debit, they can't just collect it. So
yeah.
I'm not saying that annual billing is wrong, because I think some people still in that mindset with some business owners. So not saying accountants, but business owners. So you've got that battle to try and make it work, but they got to pay sooner because, as I say, you've given them time already, and it's in arrears.
I've got it that my audits, they are on completion. So that's a big chunk of income for me. So I kind of when I'm looking at my profit and loss account and planning and all that kind of stuff, audits out of the equation completely, because it's not guaranteed. I don't know when I'm going to get it. An audit could drag on for ages. I'm currently looking at changing the model to a like 50-50 approach or something like that. I don't tend to get them to sign up a direct debit mandate because we're talking like bigger numbers. So there is a kind of trust there that they're going to pay me. And I do on my sole traders, when I'm doing the tax return, I let them pay me after they've got their rebates. That has changed now because I've had a couple of clients recently that have got their rebates back, because I deal with a lot of the construction industry. They get refunds. I'm like, cool, wait until you get that. That's fine. Blah. I've had 2 recently where they got their rebates. Obviously, we get notification, and then they didn't pay me, and they didn't have any money to pay me. I was like, I can't. I'm not operating a bank like this. So those 2 are where they're not on monthly. There's a couple of other things, but those are the 2 main ones, and they are going to be changing. I don't think I'd ever be able to get an audit on a monthly fixed fee, because it's just something that's not done really, and it's not guaranteed each year as well. So you'd be in this
different landscape, isn't it?
Yeah, it's completely different. But with the sole traders and the dreaded MTD coming in, everyone's going to be going on to monthly.
Do you not think, obviously audits is a slightly different topic, but with those larger projects, actually it's maybe better for the client to spread that cost monthly anyway than it would be to pay a lump sum?
Potentially, but there's something. When do you start charging for it?
As soon as they sign an agreement.
They only tend to sign the engagement letter with you to do that year after the accounts are done, and then an audit. Mostly, I'm dealing with small audits that tend to take a couple of weeks.
Yeah.
So we are kind of getting it within that. I'm going to hopefully switch to a model of 50% upfront, 50% at the end, because I'm paying people to work. I've got to have that cash flow behind me. And I'm very much I've started this business and I've not had any external borrowing, or the money that I have put in, I've been able to take out. So I don't want to get to a point where I'm having to borrow.
Back,
yeah, exactly. I never want to be at that point. I think just in life, I've never been like that. So I want to be the same in business. So watch this space. We'll see how that goes with some of our audit clients.
Yeah, we used to work with quite a few like marketing agencies and things like that at Ignition that had used proposals for that, and they did exactly that. 50% upfront on engagement, and then 50% on completion, and then if there's any adjustments at the end of it, they just.
I think it's become an acceptable practice now, isn't it? Just of how, because everything is now, there's a lot of things being paid on a monthly basis, and not just in their accountancy practice across all businesses.
Yeah, you can pretty much do anything on a monthly basis now, right? There's not many things that you can, even when you're shopping online, you can do it on over 3 months or over 6 months without any interest. Buy a pair of trainers over 6 months.
Imagine that. Imagine you start offering accountancy fees on Klarna. I mean,
Yeah, it won't be long.
I bet someone's doing it. I bet someone's doing it somewhere. One of these online accountants. They probably are doing it.
Well, I walked into my local golf club to join the other day, and they were like, "Is this much to join on an annual basis? You can pay it all up front, or you can use our finance partner to spread the costs monthly." And they've got a partner that they work with that finances it and pays them up front, and then you pay them monthly. It's just the norm.
It is the norm. I think I remember when I first became a home owner, and it was like, obviously accounts tax is monthly, but everything else you're like, oh, I'll just pay my insurance up front. It's fine. I don't want to have the interest. Now I'm like, put it on monthly. It just makes everything easier. Everything is that way.
But I also think that's also like, it goes back to what I said. I've always, even if you had the big annual bills, you try and work, what it costs monthly. So as I said, it goes back to when it comes to pricing. In my head, I've always know what it costs to run the business. That's on a monthly basis. So, and I can work it back to a day, and I kind of go, right, when it was just me and James, we've got to make sure we both want to earn what we want to earn. So then we've got to make sure we're billing or pricing rightly to cover that. Now, when you have team members, and that's, for us, is we've had that internal changes, and we've kind of just lost a little bit, and there's been an element of, us as a team, we've kind of over egged it on trying to, keep clients happy, and they're kind of gone, we've given away too much time. And then now that's the expectation. That's just a normal behavior. And it's like, actually it's costing us, because actually there's something else that's been kicked further down the road in terms of work, which then means that could upset a client who is paying monthly. We're not servicing them.
Yeah.
And that's where we're not the word struggling, but we've got to try and bring it back. And we've been using these next 2 weeks to sort of to do that.
Yeah, nice. I think sometimes it's good to have that kind of reset, right? Taking some time out of the business to just spend a couple of weeks just resetting everything and working.
It was literally, because when I was on, try not to swear. When I was on holiday, and it was literally, I switched off, and I was not using my phone, and I literally was sitting there, and I went, oh, it just dawned on me after like 5 days in. Hopefully my wife's not listening. It dawned on me. I was like,
she's
oh my
not
God.
Listening.
Yeah, no, she has to listen to me most days. She's not listening to me on a recording.
Exactly.
She's not choosing to listen to you, Jane. No,
it's after I think it's 5th day of holiday. I was sitting, I was just in my moment, I was like, oh my God, we just dawned on me. I was just like, we're just giving away too much time, because I don't know what made me think of it.
Were you in bed having a little nap and just went,
no, I was by the pool. And I just went, crap.
Off in the sun lounger with your pina colada. Oh my God, I'm giving away time.
It was a limoncello spritz. It wasn't a pina colada.
Oh, very good.
It's always a pina colada.
But it was literally a moment I've gone, oh, we've gone away from what we had. What I like to think was in place well. So for us, it's now coming back. But again, it's we're looking at it and going, where do we price? Where are we pricing to? Where's that marker? Where's what are we trying to achieve? And of course, it's also what are people prepared to pay for as well. That's the other side. So I get what Amy's saying, when you go and look around and see what other people are doing.
Yeah, something that I've always preached since my Ignition days was like, if you increase your fee, double your fees, but half your clients, you're in the same place.
Yeah, and less work.
Less work for the same amount of money.
Yeah.
You're always going to lose clients when you increase fees, and that's the same in the software world, right? We've seen a lot of it around software price increases, and we get people coming to us that want to leave because there's increases in other businesses and stuff like that, and it's always going to be the case everywhere. But they're probably not the customers that you want anyway. because
Well, if they're going to quibble over something where you've done a decent job for them, then yeah, you're better off without them. But I think as an industry, having not always, having come in later, and I used to watch it with my old bosses, and I've probably seen it with a few other practice leaders as well. When you talk about price increases, you can see them balk at that reaction to sort of say, "Oh, okay, I don't want to really have that conversation. I've had this client for 15 odd years. It's very, you sort of think, but it's the way the times are going. You have to, otherwise."
I also think that's the root cause of the problem. People aren't paying enough for their accountants, so they don't value what they can do to their business enough.
Yeah, and I don't think there becomes that thing where they go, "Oh," and I'm not being funny here. Some people go, "My account doesn't do that," and I often have that discussion and say, "Yeah, but I'm not being funny, but are you paying them for that level of service?
How much are you paying for that?" Yeah,
and they go, and then they go, "Well, I'm paying this," and you kind of go, "That's why." And I have had that honest discussion before. So I said that, like, you're asking me to propose or something. Here's the fee, and they go, "Oh, it's twice as much as my normal accountant." Okay, I'm not going to go under. But sometimes I go, "Damn it, I really wanted that business."
If I really dropped it £10 a month.
Can I change their mind?
I had it, so about a month ago, I had a guy come to me with his accountants. His current accountants had produced the account, and a friend of a friend, and brought it to me. It's like, "Can you have a look at these?" I'm like, "Cool." So, like, free meeting, because it's like a discovery meeting and whatnot. There were a few things that you had to sign, send back. I was like, "Cool, we'll give you a stamp and whatnot, because you're going to post it back to your accountant and all that kind of stuff." Did a proposal for him because he's like, "I'm not happy. There's no contact. They do my VAT return at the end of each quarter. I'm paying them for bookkeeping, but they just do the bookkeeping at the end of the quarter. I can't remember what I did 3 months ago." Blah blah. The usual story. We do hear this. James will back me up. We hear this quite a lot. They're stuck with an accountant for years. They're still doing things annually and quarterly, paying all this money, blah, not happy. So I spent the time and spent about an hour with him, did a quote on Ignition in front of him, and I could not match the current price that he was paying. Even with my low fees, I couldn't match it. And I was like, okay. And I showed him it, because I'm quite happy I'm really transparent and show everything how much.
Why would you want to?
Why would I want to show him?
Why would you want to match it? You're obviously going to offer more value.
I know. I didn't want to. I sent him the proposal. I said, "Go away, have a sleep on it, have a think about it. What you're going to get with me is when you're going to actually see me, we're going to have that communication. I'm going to do things. I do weekly bookkeeping as standard on everyone, blah, blah, blah." Come to about a week or so ago, I get a message of, right, these are my accountant's fees. I've looked at your fees. Tell me why you're different. So basically, pitch to me. It's like, "I've just spent an hour with you going through," and my response, I was away at this point, and my response was, we're going to do the same services, okay? But what you're getting with me is that relationship, is that communication, is that trust. Like, you brought me their accounts to get like the seal of approval to sign them off. That's what you're going to get. Kind of left it like that. And yeah, he's come back going, "Oh, okay, where do I sign?"
Madam.
But so there is that price sensitivity conversation. And I think probably looking back, the reason I'm telling you the story is because looking back, I probably would have buckled and gone, "Oh, I'll match it. Come, I need your business. Like, I will match it. I will do whatever." But then I'm doing myself an injustice. There's no point in operating at a loss just to get another number on there. So it does take a lot of confidence to get to that point of saying, of not giving the discounts, not like reducing your fees to match what they want, standing your ground. It's not going to be one size fits all. Even I'm still tweaking with Ignition on various different bits and bobs 2 years in. But having the confidence to turn around to existing clients and new clients and be like, "This is my worth." And at the same time, having the conversations with them to say they need to be increasing their prices does help as well, because a lot of my clients have not increased their prices in a couple of years, and everything is going up and up and up. We all need to be like moving with that.
the one thing we're trying to do and make sure it's transparent with the clients is obviously we're saying, you know, we have we obviously got the compliance, which is the year-end accounts, and obviously a lot of the stuff's built into that fee, isn't it? That what we do with them in the year, we're going to do accounting, taxation, advice. But what we're trying to do is split it out so it's shown as, well, this is kind of going to cover the time to do those accounts, which is, bearing in mind, if we're doing the monthly work, it should just fall out in the wash literally once the year end's gone. So effectively, we're showing a separate line on our engage or proposal engagement letters to say this is time to give you an accounting tax advice, and then that becomes more for us a way of looking at what we're going back to time, but we're not doing it time based. It's value, but as I'm saying, it always falls back to we're over giving something. You know, some people want me to have 4 meetings a year with them. Okay, that's fine. That's if that's rolled up into the accounting accounts and tax sort of line, we're feeling that's where it's getting lost. So we're stripping it out and trying to have a better understanding of it ourselves. So this is what we've done the last week or so, going around going, right, let's split it out. They can see what it does to cost for the compliance. Now they can see a cost to have someone more responsive and proactive for them. And if they don't want it, well, there you go. You know, you go back to someone else. And
it's much easier to fall back onto that, right? If it is itemized, to be like, well, if they start coming to you and asking for that, you'd be like, well, as per your engagement, you can see you chose not to have that included. More than happy to add it. More than happy to add it.
Rather than just,
so whatever it might be, we need to charge you for that. But at the moment, you don't get that.
It was like the other day, I didn't know, so I was on holiday, but a team member went off and did some Xero training. No, it's QuickBooks training. Sorry, I take it back. It was QuickBooks training. And, you know, what was planned with the client was, you know, a couple of hours. Well, since then, my team member, when I was on holiday, found out had gone back and done another day. And I'm like, okay, well, we're going to have to bill for that. You didn't tell, you have to tell me that. You know, that's that you're not going to get it for free. That's you out of the office on site doing something for a client because they want you on site because they didn't want it remote. Because you know, the argument could be it could be done remotely, save travel. I said, but that means we've lost a day somewhere else doing something for another client.
But do you feel with that you're on the back foot because it's already been done? Because this is what I found, like in my previous roles, was we'd go and do something and you don't have, people are, you know, whether it's me as a manager or my seniors or my juniors, are too scared to have that conversation.
I think
to be like, this is going to cost.
Yeah, well, I think probably when I started this, yes. Now, no. My argument is going to be
no fear.
No, well, my argument is always going to be, I say, do you do work for free to them? And they go no, and they go no, and I go, well, it's no different, then, is it? You know, we're not doing this for free. I said, I'm not. They say, for example, that, you know, they're a car mechanic. I don't expect to go and service my car for free.
Very true.
Right. Okay. So they answer that back, and I go, okay, then so you're going to be billed for it, and then there's no argument.
Or even like that example, that mechanics example was exactly like diagnostics. If you took your car into the garage to diagnose something and then they wanted to fix it, they'd probably charge for that.
Yeah, I mean, some people might do a free diagnostics, hoping that you go back, you stay with them to get the work to be done. You know,
you're not just paying for them to plug something into your car. You're paying for their knowledge of, okay, they plug that into your car, but then they also know what those error codes are, what it means, what it's going to cost to fix it, etc., etc. So you're paying for that 10, 15, 20 years of experience. And that's exactly the same with the accountant.
Yeah, so probably, can I say when I started it, I probably would have bolted it and just I don't want to upset the relationship. Not upsetting the relationship, but just being honest now and saying, well, actually, you know, it's better for me to charge me to do it and send me or a team member in to do it and get it right than us have to pick it up when we're doing something else and then charge you more to put it right. So it's interesting, but equally, like, you know, we spoke about it. Software and software costs go up. That's literally like we have no control of that. And then we've got to be quick enough to repass it on.
Yeah, I was going to say that's an easy one for me, because when something like that's happened, actually, I can't remember who it was. I think it might have been Ignition. There was someone that I have a paragraph that I've saved that says about the price increase and passing that on, and there isn't a lot we can do about it. When I did my price increases in April, I had one client leave.
That's a pretty good statistic, though.
Yeah, that was my first client that had left. I was like, I should be upset about this, but I wasn't. It was an accounts and corporation tax prep only job. I wasn't doing any of the bookkeeping or anything like that. And it was small, and it was about I think I did about 8% increase because it had been 2 years and I hadn't increased before. I am getting a bit of kickback now, but it's as things are getting harder for the clients, because they are, they're facing costs in all sorts of areas. So they go to the accountant first. They're like, okay, I can do the bookkeeping, it's fine. And you can't, you're going to do it wrong. But anyway.
Not if you had
yes,
a really good piece of software that's bringing someone out in a couple of weeks' time that can go behind the scenes and do it all for you.
Well, and this is actually, this wasn't a lead in directly, but this is what's happened. I've had someone that's taken back their bookkeeping, but I'm still doing the year-end accounts, and I'm charging a fixed monthly fee. That fee was based on me doing the bookkeeping. I am being a little bit scared and not having that conversation to be like, not going to be as good as me doing it. So I'm going to have to up the year-end fee. I need to have that conversation. But obviously having the evidence to show that it's not as good helps with that conversation. To be like, this is what it was like before. This is what it's like now. No offense, like to you, yeah, all the software, I'm obviously not talking about you, Will, but all of the bookkeeping software that like, oh, you can do your own books, it's all easy. It's not. We train for this. And that's not us trying to hold it to ourselves. If you're more than capable, great, go for it. But more often than not, we see that people aren't. So we need to then price accordingly. If you're doing your own books, it's going to take longer for us at year end than it is going through the year. So we're having to look at those tiers more as people are gaining more confidence using the software to do things themselves.
So we don't sell direct. Well, we don't sell direct to business. We have a few that use us. Generally, they're bigger companies. But the few that I have spoken to, this is a funny story.
Okay.
Have accountants and have bookkeepers, outsource bookkeepers.
Okay.
Accountant, and they want to use us to check the work that their outsourced bookkeepers doing, because they don't speak to them. They're blind on their financials. They don't know what's going on with they never speak to their accountant. They might speak to them once a year. And I'm like, well,
why are you paying them?
You don't need to use us. You need to go and find the new accountant.
Yeah, no, exactly. Someone that's going to help them.
Like, well, yes, of course you could plug Expert in and we'd pick up the errors that your bookkeeper's missing. Yeah, we would do that. But then what are you going to do about it?
I always say to people, because I do get, and James probably say the same, I get inquiries from people, some of them straight away, how much do you charge? And you're like, oh, you're not going to. I say, what do you charge? I'm like, oh, no, straight away. And then some of them I will have like a discovery call meeting. Now that I've got an office, some come here. But what I find when they come here, they're here for a lot longer than like 15 minutes. It's an hour out of my day. And then a majority of them are, oh, I'm the current accountant. I never hear from him. I send a message. He doesn't come back within a couple of weeks. I don't know what my numbers mean. I get my tax bill on the 30th of January, blah, blah, blah. All the same story that we hear from so many people. And then they stay with them. And I'm like, if you have a rubbish meal and service at a restaurant, you don't go back. I don't know many people that go back to a restaurant where they've had rubbish service and food. So why are you paying an accountant that you're not happy with?
People are scared of change sometimes. Changing accountants is the last thing you think about. It's one thing I've also established.
It's so much, it can be a lot of, like we were talking about pricing, it can be a lot of money for some people to have that.
Yeah,
it goes back to, you think everyone sees us as a cost, and I agree. It's actually, you got to spin it and say we're a value. We're able to drill down and talk about we talk about understanding our clients' figures, and actually that's more valuable to say, look, this is what you're doing, and this is where you're going to be or able to do, and if you want an extra member of the team member, this is the implications. Understanding break-even, we can do so much more. Where's break-even points and all that sort of stuff, but of course that's not really talked about. It's just, and it's I'll pay my account on this. I'm waiting, and then that's it.
I think we'll close this episode on one question. Like, if you could go back and give yourself a piece of advice when you first started that you can give to anyone that's listening that's maybe thinking about or just starting in their practice and struggling with pricing, what would that one bit of advice be?
Market research
To determine what they should be
to
charging?
determine what you should be charging. 100%.
Yeah, I kind of like say market research and really appreciating what you're worth.
And do you think do you think other accountants are willing to share what they're charging?
I mean, I put it on my website. I've got a price. I know it's a from, but
Yeah.
it's a ballpark, and I do that on purpose because I don't want people to think I'm going to charge them 100 quid for a year-end set of accounts corporation tax, which I'm sure somebody probably does. But the software alone costs more than that for me, so that won't be happening. But I found that I did lean on friends who were with other accountants, because some of my friends and family don't want me to act for them because either they don't want me to know what they earn or they've got dodgy accountant.
Yeah.
You know, either that's fine, that's cool. But they would tell me how much they were paying.
Yeah.
People talk, my clients talk about how much they're paying their accountants.
Yeah,
I
I'll get it as
specifically
well.
say to some, you know, you do have a discount because of this. Please don't tell anyone. But that tends to be like friends that aren't bothered that I know their income. But yeah, there are people that are sharing, and I periodically chuck it into ChatGPT and go, I'm in Dunstable, Bedfordshire. What do people? Yeah, actually, that is it. It has helped. What do people charge for this? What do people charge for this? Blah, blah, blah. And it will go out and it will look. So yeah, use ChatGPT.
Yeah, why not? James?
No, I was saying, quick, I was to say, I've got nothing to add. What Amy said is market research, and I'll go back. Like I said, just understanding your value. You've taken that leap to sort of go into practice yourself. So you've obviously got confidence in to be able to go and do this, to go and work for yourself. Now you got it's that confidence to sell yourself to, and therefore you've got to appreciate your value that you're bringing to people as clients, and that's what you got to try and then, you know, it's price yourself at.
Yeah, nice.
Yeah, cool.
I like this episode.
You said you would like it anyway.
Stories.
I think it's my favorite. I think it's my favorite so far.
We didn't even go into value pricing.
We didn't. No, we
didn't even talk about the nitty gritty.
Probably do a whole nother episode on.
Well, we'll tag on
We'll
again.
just share our price list. There you go. So my website, people.
my website's not working, people.
Oh, are you going to put your pricing on there?
Yeah, well, yeah, probably.
Okay, I'll be looking at it. Let me know.
We're still tinkering with how it looks at the moment.
Links in the comments.
Link in the comments. Cheers, guys.
Yeah,
thanks
cheers.
See
you later. Bye.
Thanks so much for listening to the Bean Counter to Boss podcast. I hope you enjoyed that episode. If you could leave us a review, subscribe, that would be incredible, as it really does help to get the word out there for our little podcast. Hopefully see you again in a couple of weeks' time for the next episode.